Learning Objective 4. I hear your heavy breathing. Okay, we've covered a lot of material getting to Learning Objective 4. So let me just say I completely understand. Those are some of the longest videos that you may watch or experience in this semester. So I relate this to a period of time before I became a mom and when I participated in 35 and 50-mile bicycle rides. And so my favorite part of those bicycle rides was the refreshment center that happened in the middle of the race. Well, I think that's where you guys are. You're in the middle of this race. And so I want you guys to understand the basics of why we need equivalent units in process costing, how they're calculated for both transferred in cost, material, and conversion cost. Understand why those are separate. And I understand that the majority of you will never leave Union University and calculate the equivalent per unit cost again in your life. However, the understanding of this process may be a benefit to you somewhere in the future. So take advantage of what we have covered so far and focus on why these are important and how they can be used in the future. When you cover this material on the exam, you do need to be prepared, but you will have your notes and your text to resort back to help with calculations if you need them. Okay, so this is not something that you have to completely absorb in memory. I'm really more concerned about you understanding the process as we move through this chapter. Okay, with that said, normally when we would dread moving into journal entries, those terrible debits and credits, this might be the easiest part of your chapter. Okay, so let's breeze through what we see in the journal entries for a process costing system. The same thing happens here as in the job order cost system. Remember, we are accumulating cost in the raw materials inventory. We're accumulating cost in manufacturing overhead as we incur them. Then we assign those material and labor and overhead costs to work in process. We allocate overhead into those appropriate departments as we move product through, and then we adjust in the end for our estimate. Okay, so the only difference, once again, in the job order costing or the two differences between job order costing and process costing is that we have multiple processes going on. And so we have a work in process account for every process, not just one work in process account for the job. But eventually everything gets to finished goods and then to cost of goods sold. So if we just do a quick review through the journal entries, and I encourage you to follow along with this lecture in your book, you can actually see the T accounts, which is a very informal general ledger, for example, as an illustration beside each one of your journal entries in the text. So please feel free. I encourage you to open up your book and flip to the part of your chapter that addresses Learning Objective 4 as we move through these. But the same as before in job order costing, when we purchase, let me get a pen for you here. When we purchase raw materials, they're simply added to the raw materials account. We credit the payable account until we pay for them. As we use those materials, okay, they are moved into work in process for assembly. Those materials are moved into work in process for cutting. Manufacturing overhead. What does that have to do with materials? Do you remember? Indirect materials that cannot be traced directly to the assembly process or directly to the cutting process are simply considered manufacturing overhead. Okay, but we have three different sets of materials: those that went into assembly, those that went into cutting, those that were indirect materials for overhead. We're going into these accounts with a debit. We're coming out of our raw materials account with a credit. Direct labor happens the same way. Okay, as people are stamping the pictures of those puzzles to the cardboard in the assembly department, we have labor taking place in the assembly. We have labor and overhead taking place in cutting. Once again, we see this manufacturing overhead in our labor journal entry. What was this? Once again, this was our indirect labor. Our supervisors that may not be traced exactly to a particular process or department. So we're assigning labor to each department, not just a job, but to each department. Now, the same process happens with overhead in job order costing as it does in process costing. We debit. Remember, we're debiting manufacturing overhead for the actual cost. So anytime you see a debit to manufacturing overhead, this is the amount that we have actually incurred in manufacturing overhead. This is depreciation. No dollars, just a journal entry. But the next one, we see a debit to manufacturing overhead and a payment of cash for some utilities and rent. Actual cost going into manufacturing overhead. So at some point, I'm going to have to allocate this manufacturing overhead to the assembly department and the cutting department. Your book makes it easy for you and simply says, hey, we have a predetermined, the company has a predetermined overhead rate that they were using, and using that rate, they allocated, here's our allocation portion, they allocated $48,000 of manufacturing overhead to work in process assembly, and we allocated overhead to work in process cutting of $11,000. So this credit to the manufacturing overhead account is taking $59,000 out. So just to give you a heads up before we get there, what did we spend? Okay, we've spent $55,000. If we add this up, we've put $55,000 into our manufacturing overhead account. We moved out $59,000. There is a difference, and we will have to adjust for this at the end of the period. Okay, but let's move forward for right now. Okay, so we've got labor. We've got materials moved into the cutting and assembly departments. We've got the conversion cost, labor and overhead, and we have manufacturing overhead that has been allocated to each of these departments. So once we have finished our work in the cutting department, we will move all of the cost. Okay, so this happened in cutting. If you remember back in our journals, we incurred $176,000 in the cutting department. I'm sorry. The assembly first. Let me back up. We incurred $176,000 in the assembly department. When the costs were completed, the products were completed in the assembly department, we take that $176,000 out of assembly and we move it into cutting. Okay, so surely my arrows should be coming this way. Okay, we spent $176,000 in assembly. When we completed assembling the puzzles, we move those costs over to the cutting department where we will cut the puzzles and put them in their boxes. Once they were complete, if you will remember, when we finished, we had $201,400 in the cutting department of completed puzzles. When they're completed, in this case, that was our last process, those costs moved from the cutting department into finished goods. Now we're ready to sell our inventory. So when we sell our inventory, it tells us that we sold the puzzles for $8 each. Okay, so that's pretty simple. If I sold 35,000 puzzles at $8 each, that is $280,000 in sales. We debit cash or accounts receivable, and we credit sales for that amount. But I also have to remove those 35,000 puzzles out of my ending inventory, out of my finished goods inventory. It's not there anymore. So how do I know how much needs to come out of finished goods and move into cost of goods sold? This is why we've used our process costing report. So if you'll remember, in our process costing report, after all of the costs that came in, remember this came out of assembly, this was beginning work in process, and so of all of the costs that came in from assembly and beginning work in process, plus the material and labor and overhead that was added in the cutting department, we ended up moving we ended up moving $201,400 into ending or finished goods, ending inventory, finished goods. But we determined that all of those costs, what was transferred in, material, labor, overhead, that all of those costs, once accumulated and divided by their equivalent units, equaled $5.30 per unit. So we know that in both processes, all of the cost incurred together divided by the equivalent units that we finished in each of these processes ended up being $5.30 a piece. So when we calculate cost of goods sold, what comes out of inventory and goes into cost of goods sold? $5.30 a piece times the 35,000 puzzles. All right, so we have sufficient amount in there. Let me come down one more. Remember, we have $201,400 in finished goods inventory at least, and what we've moved out is only the $185,500. So we still will have some finished goods, some puzzles left in finished goods inventory that can be sold. Okay, so like I said, the journal entries are relatively the same. We're simply moving through the process with multiple work in process accounts. And the final entry that we will take a look at is how do we adjust for the overhead, the difference in our overhead. Okay, and I may have misadded before. This tells us that our actual manufacturing overhead costs were $58,500. Okay, so all the debits in our manufacturing overhead account would have been $58,500. Yes, I didn't account for the indirect materials and indirect labor when I went back. So if we've actually incurred $58,500 of overhead, but I have allocated $59,000, then I have put more into overhead than I've actually spent. And where did that go? That overhead went to finished goods, and then it went to cost of goods sold. So I have put $500. I've put $500 too much into cost of goods sold. I need to correct it. I take the $500 out of cost of goods sold. I put it back into my manufacturing overhead account, which will now cause this manufacturing overhead account to have a zero balance. That's our adjustment at the end of the period. Okay, so once again, go back, just take a brief moment to browse back through those journal entries to be sure you understand how materials and the conversion cost get moved from process to finished goods and then to cost of goods sold. And then we will look at some of the final objectives of the chapter and how we can actually use this information to make decisions for our company.